everyone is telling you to start investing. So you scrap together your first 1,000 in savings, but staring at all your options, stocks, crypto, NFTs, corporate bonds, government bonds, you are simply frozen. Terrified of wiping out your hard-earned money with just one wrong move. I was exactly in your shoes just a couple of years ago. So in light of all of that confusion, this video is beginner investing guide. This video is broken into 5 easy parts. Together we'll learn everything from the purpose of investing, how investing works, what is a stock, Warren Buffett-inspired strategy, and the logistics of investing, covering everything you need to know to start investing confidently. Money should make more money, not rot under your mattress. Keep $1,000 in cash. In 5 years, inflation will erase about 20% of that money. In simple words, your morning coffee and croissant goes from $3 to $5. You might have some money in the savings account, and that's great. But the problem is that most of savings accounts have very little interest, only about 1 to 2%. Inflation on average is about 2 to 3%. That's where investing comes in. It basically flips the usual script. Your money grows faster than the prices rise. But how exactly? Investing, in simple words, is buying an asset and then selling it for a higher price. There are lots of different classes of assets and we'll talk about them in just a second. But before that, you need to understand the 2 ways investments usually make money. Let's take a house, for example. Imagine you bought a house for $100,000. The first income, you could rent a house monthly and get a monthly rental income. The second one is you could sell a house later and get profits from sale. Now, if you're a beginner, you're probably not buying a house, but property is only one kind of investment you can make. Nowadays, there are just dozens of options, but in this video, we will focus on stocks. They are pretty much the basics of investing. They are considered to be a bit of a lower risk, and you can start as low as $1. So that's sort of perfect for beginners. So what is a stock? Stock is a tiny piece of ownership in the company, like buying a piece of Apple, for example. As a shareholder or a stockholder, you now own a tiny piece of Apple's success. Remember I said it's important to know the 2 ways investments make money? So stocks provide you both incomes. You can buy and sell stocks just like a house, and the rental income in stock market is called dividends. It's essentially Apple saying to you, thanks for believing in us. Some companies pay steady dividends monthly or quarterly. Some companies don't pay dividends at all and they rely on the long game. But the burning question stays. What if Apple fails? A real and valid fear. Companies flop and go bankrupt. Can you invest without that terror? Spoiler, yes, you can. Skip the stock picking. Even professionals with much more resources and much more expertise fail very often. My personal view of investing aligns very nicely with what Warren Buffett said right here.
The best thing with stocks actually is to buy them consistently over time. You want to spread the risk as far as the specific companies you're in by owning a diversified group, and you diversify over time by buying this month, next month, the year after the year.
Buy consistently over time and diversify. My personal opinion, not a financial advice, but this is the best way to get into investing and start. To achieve that, instead of buying individual stocks, you can simply buy index funds. What is an index fund? It's very simple. Think of it as a basket with different stocks inside it. It tracks and matches the market. So inside of the index fund, like S&P 500, for example, you will have a little bit of Apple, a little bit of Walmart, and a little bit of every single top 500 US company, basically. S&P 500 has an average return of 10%. That's great, because remember we were talking about the 2% inflation? Well, 10% obviously beats the inflation, and it's more than any savings account can offer you. By purchasing a versatile index funds like S&P 500, you're basically able to get more or less predictable, stable, decent returns without too much work to do. Why? Because you bought one thing, and inside that one thing you have 500 smaller different things. And even if one of them completely flops and goes bankrupt, you have other $4.99 companies to cover for that loss. When you try to pick and choose individual stocks, you're basically trying to beat that 10% market return. And it's totally possible, but I don't think as a beginner you should be doing that. Do you really want to spend days researching, checking your portfolio every single day, and having a heart attack when you see your portfolio going to minus for the first time? Don't fall under the lie of getting rich quick. Play the long game. Invest $50 each month and forget about it. Check in 5 or 10 years later, and that's where you will see the most results due to the time in the market and the compound interest. It's just like going to gym. You don't see a six-pack after the first ever workout. It's the small, consistent, unsexy steps that lead to your dream body or to investments that can fund your dream life. Great, so far we talked about why you should invest, how investing works, and the strategy I would recommend. But how exactly do I go from having cash in my wallet to owning a piece of Apple? Let's quickly talk about the logistics. There are only 5 steps separating you from investing. In an ideal world, if let's say you wanted to buy Apple stock, you would go to Apple Store or apple.com and be like, hey, I want to buy an Apple stock. Unfortunately, it doesn't work that way. First thing you need to do is to open an investment account. Think of it as a special wallet where you transfer money from your checking account and then out of that wallet you buy investments. If you're a beginner in Canada, I would go for TFSA account. It's the most simple and most versatile. The second thing you need to do is to choose a brokerage. Brokerage is the middleman between you and Apple. Usually it's going to be an investment platform or a bank. If you're in Canada, I would go for Wealthsimple. It's very easy to set up, very beginner friendly, and has very low fees. Next, you just need to open that account, so let's say our TFSA, on the brokerage you've chosen, so let's say Wealthsimple. Step 4 is the most important one and the most interesting. There are essentially 3 ways you can invest. First, you can have a portfolio manager. So you basically transfer money to your TFSA and then a banker will choose and invest for you. They will usually require higher net worth, and because it's a real person doing all the work for you, you'll be charged higher fees, meaning you earn less. Second way to invest is to use a robo-advisor. Technically, it's just like a real person or a manager investing for you, but because it's a program doing all the heavy lifting, the rates are much lower, therefore you earn more. Wealthsimple has a great robo-advisor, and that's exactly how I get started. I think it's a great way to get into investing because while you're still learning, the robo-advisor is already investing for you. So you're not losing that precious investing time. And the last way you can invest is to do it yourself. That's where our index funds and strategy comes in. With self-directed investing, you're fully in charge of your portfolio. You would manually look up the index funds like S&P 500 for example, and purchase them. Out of those 3 methods, as a beginner, I would go either for robo-advisor or self-directed. This way you save a lot of money on fees and you actually learn how to invest. And the very last step in the whole investing process is to consistently transfer money. The true growth comes from you consistently transferring money to your account and investing. That's how you grow your wealth over time. You should be genuinely proud of being one step closer to investing. You deserve that dream life of yours. So use your money to fund it. As a small way to show my support for your journey, you can get $25 when you open a Wealthsimple account. Get the bonus using the link in the description. And if you are serious about changing your financial future, hit subscribe. And before you throw everything into investing, please make sure you have an emergency fund. 6 to 12 months of your living expenses safely sitting in a savings account. If you want to build an emergency fund as quickly and efficiently as possible, watch this video right away. There I walk through how to save your first $10,000 and build a rock solid emergency fund.